Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius and Anucauskas. Today is the 22nd of February 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then guys, let's quickly jump into the charts. Now the first one I want to touch on here is Nasdaq100. Now looking at this 4-hour chart, you can see that yesterday this index managed to close outside of this upside support line, of course. Now don't get me wrong, it's certainly from on one hand it could be seen as a bearish indication, but looking at the cash index right now, we can see that it's recovering slightly, and it is currently trading, the cash index is currently trading around the 7,055 area, approximately there, so near this near the yesterday's pivot here. So basically for now guys, probably it's better to remain cautious here, because in order to kind of, let's say, target higher levels, we probably need to wait until we see a nice good pop above this week's highs, and those were near the 7,095-96 area. So basically only then probably we'll target slightly higher levels. But for now guys, it's kind of putting us into this little waiting game right now, because for it has an equal chance to go lower as well, especially if it decides to drop below the psychological 7,000 level. And if it does that, then yep, we could see a further slide lower towards the 6,865, or even just slightly below that, the 6,840 level, approximately there, near the lows of February the 8th. So for now guys, long story short, basically the main thing is to watch for some key and resistance and support levels today, because like I said, it's on one hand it is looking slightly bearish because it's failing to kind of create a higher high, but at the same time, like I said, we could see a nice strong pop to the upside where we could break above the 7,096 area, approximately there, and then push towards higher levels, maybe even going towards the 7,200 and above. But for now guys, it's probably better to be safe and just continue observing some of these key areas of support and resistance. So on the downside, of course, it's the psychological 7,000 level that we're keeping a close eye on, and slightly below that we do have the 6,970 area near the lows of the 14th of February, and also the lows of the 6th of February. So that, guys, for now, keep your eyes on those, on that one. But again, like I said, be very cautious with this one and wait for a confirmation break. Jumping into another index, which is the dollar index. Now, very interesting developments here. Initially we saw this one moving above this tentative downside resistance line, taken from the high of the 15th of February, but you can see that now the index is recovering back everything. So, or should I say, the bears are recovering all the lost grounds, their lost grounds, of course, and it's pushing the index back below this downside line. So for now, basically what you could do is keep your eyes on today's pivot, which is around the 96.55 level. A nice good drop below that could open the path towards this little area here around the 96.40, where you can see that the index found very good support. But if that fails to withhold, then yep, further declines are possible. But for now, like I said, for now it's a very also tricky one. It is kind of balancing near this downside resistance line. Of course, it's a bit of a tentative one, but nevertheless, keep your eyes on that one. If this decides to reverse and pushes back higher here, back above the 96.70 area, then yep, we could potentially target slightly higher levels. Of course, initially aiming for the 96.90, or even actually going further up here towards these recent highs that we saw here on the 19th of February, and that was approximately around the 97.10. So also good potential area of resistance. But again, like I'll repeat myself, in order to kind of consider those levels here, we need to see a reversal here, a move back above the 96.70, and only then we'll target these higher levels. On the downside, it's the 96.55 area that we're keeping a close eye on. A drop below that, of course, could send this initially towards the 200 EMA or the 96.40 level, but a break below that, yep, could open the path towards much lower levels. So for now, let's play this. Let's see how this performs, and maybe this is something more for next week if it decides, of course, to remain around here, and if it decides to continue trading around this area. So probably more action could come in, or shouldn't probably use the word probably, but they're most likely that there would be more action next week if, let's say, this remains around here. So, but keep your eyes on these key levels that I've just mentioned. Jumping into USD-CAD, now this one is a very interesting one, and of course we did have the retail sales coming out right now from Canada, and some of them were like, one of the numbers came out slightly lower than expected, but you can see the initial reaction was kind of a move lower here. So basically dropped below this key area of support around the 132, around the 1.32 level. Of course, that's not the probably reaction that we were thinking. Basically, the Canadian dollar got slightly stronger here against the US dollar, even though the numbers, one number came out as expected and the other came out slightly below expectations. So still, the Canadian, it didn't spook the Canadian dollar buyers, and you can see that USD CAD started dropping here. Now, of course, this is a bit of a tricky one. We might actually see this one reversing and pushing back up again by the end of the day, but if this decides to travel back above the pivot, now this is where you should keep a close eye on it, because a nice good push back above the 132.10 level could open the path back up here towards these highs that we saw here, well, today, actually these highs of today, and that was around the 132.43 mark. Certainly that could be a nice, very nice potential area of resistance, but in order to kind of consider that area, this area as a possibility, we need to see the pair traveling back above the 132.10 level, and only then we will aim for higher levels. For now, it's kind of stuck here. It's more bearish than bullish, but if you're looking for something more near to medium term, or actually even short term as well, we need to see a drop below the 131.60 level here in order to get comfortable with lower levels. This would break below the 131.60, could confirm a forthcoming lower low, and eventually we could potentially test this upside support line. And I've mentioned this one in a few of my previous videos where I was covering USD CAD. This has been running for quite a while now, and that has been running from February last year. So that's why, guys, very important upside support line here, but we will consider that only if we see a drop below the 131.60 level. So keep your eyes on that one. GBPNZD, now this is getting hit strongly, and basically right now we can see that the pair is kind of recovering slightly some of its losses, but today basically the pair was all trading even at around the 1.9285 level, approximately there, and it was trading there, and you can see how the bears jumped in and took advantage and took kind of the steering wheel here. Basically what happened is that they managed to also drive this pair below this upside support line that the pair was trading in since trading above since the 15th of February. So in a way, creating this kind of bearish atmosphere here. Now you can see that the pair it's finding good resistance near this 1.9070 level. Of course, this is very interesting to see, because if it decides to travel further up here, it will probably test the 191.10 level, approximately there. But if this, of course, decides to travel all the way back above this upside support line today, now
probably could even close the daily candle above it. And in a way, what we will see here on the daily chart, or should I say, of course, potentially we could see on this daily chart, is a false breakout. And like I said, if the body of the candle, the daily candle, remains above this upside support line, then yep, we could see this nice false breakout. And to be honest, this could mean that well, the bears are not ready yet to take control here, or in other words, the bulls are not really ready to give up that easily, and we could see this one traveling further up, maybe even next week, like I said. So for now, guys, of course, the main question is, are we gonna drive, is this pair gonna drive above the 190.70 level? If it does, then yep, keep your eyes on the pivot, which is around the 191.10 approximately there. And if, of course, like I said, if the buying action remains strong, then yep, we could see this one traveling back above this upside support line. But again, don't forget that we're still trading below this, and we're still trading below this key area of resistance here at 1.9070. So if it continues to hold and we see this one retracing back down, well, to be honest, we could see maybe a test of the 200 EMA today here, which is on the 4-hour chart, visible here nicely. And that would be around the 1.8980 level, so maybe just slightly above that, but nevertheless could be an interesting level to watch. Again, for now, be very cautious. We are quite overextended to the downside in today's terms. Of course, we are seeing a bit of a correction right now, so let's see if it wants to continue correcting further up here, or actually does it want to reverse and move lower. Now, of course, what you could do as well is just to kind of keep it on your radar, and let me just quickly find the tool here. So basically, you could look at the Fibonacci retracement. So let's say if this is the low where the pair, or where should I say, if this is the low from which the pair kind of found good, from which it will retrace further up here. Keep your eyes on the 23.6% retracement here on the fib. This is where it could travel. The pair could travel towards that area, and that's around the 1.90 level, approximately there, just slightly below this pivot. So it could be another good potential area to watch in case we see a push above the 1.9070 level that I was talking about. So keep your eyes on that one, of course, guys. Like I said, we are quite already oversold here on today, well, in today's terms, but maybe it could still have some more downside. But again, for that, we need to see a nice good break here below this area of support where from which the pair rebounded recently, and that's around the 1.9025 level, approximately there, guys. So a drop below that could, of course, like I said, send a little bit this one towards the downside again, and we could then target the 200 EMA here. But for now, be very careful with this one, be very cautious, and let's see what he wants to do with this 1.9070 level. Jumping into euro dollar, I was covering this one this morning, and basically I was telling you guys to keep a close eye on this this upside support line here. Now we managed to break it to the downside, and of course at some point we managed to even break below the 113.25 level, but you can see that the bulls managed to quickly drive this one back up here towards this pivot. And of course the big question here right now is, where does it gonna end the day? Probably probably it's more of my gut talking here, but we might end the day somewhere around here, around this area between the 1.1325 and the 113.67. So between this week's highs, near these week's highs, and below, just above this 113.25, probably all the action could come in to next week. So that's why, guys, for now, be very cautious with this one. It's, to be honest, this one is just for observation today, and just to see what it wants to do. And if it suddenly, let's say, decides to drop and close the day below the 113.25 level, certainly there could be some more downside pressure.
going into next week, we could see a retest of the 113 level, or even actually the 112.90. But again, we will only consider these lower levels if we see the daily close here below the 113.25 level. On the upside, again, I probably will repeat myself again, and I've mentioned that in a few of my videos. For us, let's say, to start looking at the upside from the, let's say, more medium-term perspective, we need to see this one traveling back above the 114 level, and only then we will target slightly higher levels. Of course, initially, don't get me wrong, we will target this little short-term tentative downside resistance line taken from the high of the 10th of January. But if that fails, if that bows down to the bulls, then yeah, further acceleration to the upside could be possible. So for now, long story short, basically, guys, continue observing this 113.25 level on the downside, and on the upside, the 113.67, or in a way you could actually round it up towards the 113.70, guys. So a nice good pop above that could potentially lead this pair slightly towards slightly higher levels. And the last pair I wanted to quickly touch on, and that's EURGBP. Now, this is what I was talking about as well in one of my videos previously, and basically I was telling you guys to keep a close eye on the 0.8725 level. You can see that the pair managed to travel higher today, yes, managed to break above the 0.8705, but actually failed to drive above the 0.8725, and you can see now it's retracing back down. Certainly the day is not finished yet. Let's see where exactly it wants to finish the day. If it drives back below the 0.8705, well, I mean, we could see maybe more downside pressure, but again, for us to get more comfortable with the downside, we would like to see a nice good drop here below the 0.8670, and only then we will target lower levels. And by lower levels, I mean the lows that we saw here back in January. Or to be more specific, back on the 25th of January, and that was approximately around the 0.8620. Now that was a very good area of support here again, but we will only consider that if we see a drop below the 0.8670 level here. So keep your eyes on that one. If this decides to travel above the 0.8725, this is where it could become interesting for the bulls again. We could see this one traveling higher, initially, of course, towards the 87.70 level, but if that fails to withhold the bull pressure, then yep, back towards these highs that we saw last week here, and this is what we will target then. But again, I'll repeat myself, only on the break of the 0.8725 level. Okay, guys, I hope you found it useful. Thank you very much for watching and listening and staying behind, and I hope you have a wonderful weekend. And for those who are still trading, of course, be very careful, be very cautious, and for those who are finished for the day and for the week, of course, well, have a wonderful weekend, and I'll see you on Monday, everyone. Bye bye.